Man, I think I'm totally recharged now. The batteries are fully 100% loaded. So, but I'm not the only one who is going to work this morning. I don't think it's work, by the way. We were here to create, right? So creating is a pleasure, and I'm very happy to meet you all and to see that we're all united to exchange ideas in different areas, and that you come from very different horizons, and it's really nice and fun to intervene in places like that. So the title of the conference was how we can revolutionize the shocking monetary system. So I want us to do this together, you know, because I've been, the wheels have been turning in my head, and I've been losing sleep at night over a few questions that I'm gonna try to have you answer them for me now. So if you can help me understand what happens in the monetary system, maybe we can, at the end of this 20-minute conference, actually make a revolution and find an alternative system to replace the current system. So, you know, in 2008, the Swiss National Bank decided to help the bank UBS. UBS was in trouble. They had 40 billion in toxic assets on their balance sheets, and something absolutely had to be done because UBS was about to be bankrupt, actually. So what the Swiss National Bank did is they took the 40 billion toxic assets, they removed them from the balance sheet of UBS, and they gave them cash instead. These toxic assets were in a sort of stabilization fund, the STAB fund, like it was called. But what I don't understand is what happened after that. What do you think happened? I mean, a few years later, in 2013, the whole operation was liquidated, and we were told that the 4 billion in toxic assets that the Swiss National Bank, our central bank, took on its accounts, on its books, were sold successively. They could sell them, resell them to the markets with a profit, and that Switzerland made a profit out of helping UBS. So how is that possible? How could we gain money, earn money on saving UBS by taking from them 40 billion in assets that no one wants? No one wanted to buy. What do you think happened? I mean, how did we manage that? Were we geniuses? Is the Swiss National Bank a genius? They managed to do what no one else could do, what UBS couldn't do. I mean, normally, if you can sell 40 billion to the markets, rotten assets, toxic assets, subprime paper, UBS should have been able to do it. So why is the Swiss National Bank taking it from this big bank and saying after 2 years that it managed to sell everything, that it was a great success, that we earned money? So what happened? Explain to me, please. I'm impatient here. I'm going crazy over that. I need an explanation. I came here for that today. Because I was too lazy preparing a conference, so I said you will help me, you know, answer my questions, so I didn't research anything on that. So someone has to now stand up and tell me what happened. How did the Swiss bank, National Bank, manage this? Yes, thank you, sir. Sorry? With patience, no, because it took only a few months, actually. It was like the most rapid and successful operation that I ever saw in my life. I mean, so patience wasn't the answer, I guess. Yes?
Financial products are revalued every day on a mark-to-market basis.
Yes, that's right.
So when the markets are distressed, there's volatility, there could be adverse effects on the portfolios.
Yes.
So sometimes, like 2007 or 8, you could have very low mark-to-market for some portfolio.
Yes.
And 6 months later, the same portfolio would be worth
much more.
Much more. So this
It's a miracle.
Evaluation
Yeah.
a big debate in the financial community.
Wow. So you're saying that a paper that is worth nothing, that is actually a bunch of loans, rotten loans from residential houses in the US, was worth 0, and suddenly it was worth 100, for instance.
It's just like a Van Gogh painting. One day it could be.
It's like art.
The next day, if no one cares about Van Gogh tomorrow,
Yeah.
Van Gogh paintings will be worth 0.
All right. Let us take the Van Gogh painting. For the Van Gogh painting, there are people who are aficionados of Van Gogh and who buy Van Gogh. So, yeah, the question is who bought this subprime paper? I mean, I can understand that people buy a Van Gogh tableau, a painting, but I don't understand quite who would be a buyer for a subprime finished, rotten, toxic paper that represents loans that are not refundable, you know, that are, you know, nobody has money to repay those loans. Sorry?
The person who buys this is someone who believes that he can make 10% out of it in the future. So
Okay.
It's a bet on the future cash flow of your product.
This
It
person,
generate money or not.
this person betting that it could be higher by 10% didn't exist in 2009, 2008, 2009. Okay. Yes, madam?
I thought maybe if you want to deal with us, with the Swiss National Bank, you have to take a 10% of this rotten loans. No deal if you don't take the poison gift with it.
So you think actually the Swiss National Bank gave an ultimatum to all of its clients and partners and everyone, and that they blackmailed everyone into buying from them those rotten papers?
Maybe not blackmailing it. Maybe they flowered a bit the thing, or they.
The whole planet knew that these subprime papers were not refundable. Those people were bankrupt. The poor little guys who had taken mortgages, they couldn't pay back. It was finished, over. So there was no buyer on the market, not a single buyer worldwide. Yes, sir.
I don't know nothing about bank actually, but can it be a lie, a simple lie actually?
A lie, like
Like it,
we have 40 billion in subprime assets. How do we sell them to you? How do I lie about it? I mean, what can I say?
They say that they sold it, but can it, I don't know. Is it possible to be a lie to say that, and maybe they make something inside on the accounting and
They did that between 2002 and 2007. It's exactly what they did. All the banks of the world said that those subprime papers were worth something, that the people who took the mortgages that were underlying those papers were people that were credit-worthy. And then it turned out that those people were not credit-worthy. They had no money at all, and they would never pay back those debts. So how can we lie a second time after having lied already a first time, and the bubble burst, and everyone knew that? Yes, sir. And the last, maybe?
Is it possible that maybe because the image of UBS back then was a bit impaired,
Yes.
the fact that it was sold by the DNS was a bit more
Well, and
more respectable,
trustworthy, and yeah.
that the image of the DNS was maybe more solid than the one of UBS?
Maybe the Swiss National Bank was a bit more credible, etc. It was a national institution, but still, I'm sorry, there was absolutely not a single buyer for those papers on the market, except one. A very big one, a huge one. Yes. Who said that? Bravo. You're the genius. I mean, you solved the Federal Reserve Bank of the United States was at that time the single buyer for those assets. That's how in 2013 we learned by the Swiss National Bank that everything was sold successfully and that we had a profit out of it, etc. So all these demonstrations allowed us to know that the federal bank, the US Fed, central bank, was the single most unique buyer of subprime papers. How did it buy these papers? Not only from UBS, but actually from all the banks in the world. Did it have more money than anyone? Because no one had money. I mean, it was after a big, huge decline of stock market. Printed money. Thank you. So we're there. Now we're in our topic. What really happened is that no one had any genius, and no one had really been calculating the consequences of this enormous catastrophic subprime bubble. But at the end, the Federal Reserve Bank printed 4,000 billion in assets and bought all the subprime paper that was on the markets globally. And now all this paper is stockpiled on its balance sheet with absolutely no possibility to sell it ever again, because there's still no buyers for this paper. This paper is a total loss. So actually, no one made losses for the subprime debacle. I'm not saying that the poor US household, who I think 30 million of them had foreclosures on their houses, didn't make losses. These people, the real economy in general, made losses, but not the players on the financial market, because the Fed bought all the market. The Fed was the savior. It came in and bought all the market, and even the Swiss National Bank appeared to be a genius for a few months here. Everyone was acclaiming it for being the genius and making money out of this. But it's just the Fed who saved us all. So now, are we allowed to criticize a central bank that is saving all the system? Should we say that this is great and that what happened is fantastic and we need a central bank, the US central bank, which is the central bank of the world, to remain in this role of buying after every speculative bubble? We should rely on this Fed to save all the market and buy every paper that loses all value. Do you think it's a good thing?
It gives them a lot of power.
It gives them a lot of power, certainly, because now they are administering the financial markets globally. But is it a desirable thing? Do we need a central bank like that?
The problem is that
It's very convenient. Yes?
they are not regulated by anyone. They act completely independently, or so it seems. And nobody is actually looking into what they are doing and who is taking the decisions. Is it backed up by any political authority?
Yes.
Or any authority for that matter? They are their own authorities. That's the problem.
That is quite true to a certain extent, but they have enormous contacts with the White House, actually, since the Greenspan era, since Greenspan was the central bankers in the 80s to the 2000s. There's been much more contacts with the White House, so they're very, very much related to what Washington needs, and we can say that today we have very much political markets because of that. But yes, sir, you wanted to say something?
I was about to say, but that's a feature.
That's
being
one
independent.
issue, yes.
But it's a feature also.
Yes.
Be independent from the political power. I mean, that's the whole idea of central banks.
It's supposed to be independent, yes.
And then
Like in Switzerland.
And then my next question is, okay, I don't need the Fed, I don't want the Fed particularly, but then you need to have someone or something. And what does it look like?
Why do you need
Well,
something?
why do we need something? But this is the question we're going to reach. I'm just wanting to ask you right now.
I'm all for Bitcoin, huh?
You're for Bitcoin, okay. We'll deal with Bitcoin. We'll deal with you. But I'm just saying that if we have this central bank that at every crisis buys all the papers that are rotten, that saves everyone, bails out all the banking system, is this a good thing or not?
It gives a wrong indication in the market. You can
Yes.
mess up and at the end, the
Thank you. It gives very, very wrong incentive and it distorts very dangerously the markets. Why? Because if I speculate very heavily on any kind of paper, bonds, equities, derivatives, why should I now care for making losses? I don't have to care about losses anymore. I know that the Fed will come and save me and bail me out. So it is creating an incentive to speculate, a huge incentive to speculate. And what happened since 2009? The markets went up back again with totally unjustifiable, valuations. I'm not the only one to say it. Many economists and strategists say that markets are now very high. People are buying because of this incentive that I can gain money on the stock market, but I cannot lose because the Fed is going to save me, right? Any another remark about this? Yes?
It's just delaying the problem because at some point the shit will hit the fan. So, yeah.
Shit will hit the fan, meaning that we're going to have our next crisis soon. Yeah. They are still going to print money. So where does it stop? I mean, at a certain point, if they print money and buy assets from to relieve the markets, the balance sheet of the Fed is going to reach 100,000 billion. So this is now a major preoccupation for the Fed itself, that they know that they cannot keep accumulating those dirty assets because it's bad for dollar, it's bad for the creditworthiness of the whole financial system, it's bad for the savings environment in general. And now, let us also look at what the Fed did at the same time. It bought 4 trillion papers, bad bonds, bad loans. But at the same time, it just didn't stop there. It put the interest rate at 0%. What do you think if we stay with 0 interest rates for a very long time? What do you think happens, especially to the financial markets? What happened since 2009? With zero interest rates. I can borrow at 0, borrowed money, and I go invest it on the stock market. So it's the casino for me. I borrow at 0, I go place it on the market and hope to get 25% return. So see, my arbitrage here is fantastic. I mean, I borrow 0, I put money I don't own in the markets, and I earn on it 25% over a year, for instance. It's fantastic. So the incentive to invest borrowed money that you don't own is enormous. So today's markets are shaped like that. Most of the money, 2/3 or 3/4 of the money invested in this new stock market bubble is borrowed money at 0%. So what happened when you have so much borrowed money inflating your stock markets? You have a lot of air, a lot of artificial money in the markets. It's not your own equity. You're just putting borrowed money, so you don't really care as much as if it was your life savings, You borrowed it, you placed it there, you cannot really lose in this game, right? So it very much inflates the market. If you didn't have 0% interest rates, if you borrowing would cost you much more than that, like 5% a year, you wouldn't buy so much on the stock market, right? Doesn't that sound logical? So 0% rates are here now for 6 years on and going on, and the Federal Reserve doesn't find a solution to raise interest rates. Why? Why is it impossible to raise interest rates after you kept them at 0 for so long? Yes.
You want to sit there and inject more money into the economy.
Yeah, exactly.
Moving so people can start reinvesting that into other areas. I mean, I think right about now, it's still low for such a long period of time is because the economy hasn't totally kickstarted into a full economic kind of boom.
That is the first time in history that we have 0% loans for more than 6 years. Even Japan didn't do that. Japan has been on 0 rates for less than 6 years. I mean, they calculated the exact number of months, and now the US is more than surpassed Japan in this experience. But there is a cost to that. First, you have your savings that lose value because of the fact that when you increase very much your credit volume, the mass of credit in the US economy has increased so much that the dollar valuation has been under pressure. I mean, it didn't collapse, but it is losing value over time. Your dollar of today is not the same as your dollar 15 years ago. So your savings that you have at the bank are being eroded. You don't earn interest on your savings. So if you're a saver in the US, you don't earn any money on savings. So you're incentivized to spend all your money, not to keep any savings at the bank, because it doesn't earn anything. So then the volume of credit has inflated so much, and it's not credit going really to the real economy, it's very little going to the real economy, to companies. It's mostly going to financial markets and real estate. So when this bubble of credit is so big, can you, if you were the president of the Fed, could you raise interest rates when you have such a big bubble of credit in the economy? Credit that has been borrowed at 0% or 1%, or what happens if you raise your rates at 5%? That's right. You will have a series of bankruptcies, failure, people that have no creditworthiness at all, and you would have a series of, you would have the same episode we had at the subprime crisis. Because the subprime crisis happened because you had all those people taking mortgages, and they were just at the limit of uncreditworthiness, and when the rate went up, they became, all of them, insolvable in English? Anyway. Insolvent, thank you. They became insolvent. And so that the Fed is now stuck with this very crazy situation where they have this bubble of credit and they can no longer raise rates. So we even heard a debate between economists, Anglo-Saxon economists in London, where they said, can we, at HSBC Bank, they said, is it possible to consider that the US will never have interest rates again? And their conclusion was yes. They said, why not? Who said that we needed interest rates after all? It's a very obsolete idea. So now they're trying to convince themselves that you can go on without interest rates forever. So I wanted just to stress the point of having no interest rates in an economy creates a huge credit bubble that makes you dependent on having zero rates remain forever, because if those rates went up, you would go bankrupt. So we have now a speculative bubble in assets and in real estates. We have a central bank that has been committed to buying all the downside on the markets and have given wrong incentives. And we have an asymmetry where I am a trader, I'm an investor, I can gain on the upside, but when it goes downside, I'm almost sure I will not lose that much because I'll have the Fed will come, enter in the game and make the market go up again. So we don't have a free market here. I mean, if you have a liberal view on markets and economy, you cannot support a system that is administered in that way. Yes? So.
The question, on top of that, is there any more regulations in the banking system or the trading system than in 2008?
No, because the main piece of regulation, which was the Dodd-Frank Act, which was said to be 2,000 pages long, has been enormously diluted after enormous lobbying from the banking sector, which is now the #1 lobby in Washington. And it has been diluted so much that many of the regulations, the new restrictions that were there to prevent a new speculative bubble were diluted into time, and some of the new regulations will start only in 2018. We will have the time to have seen the next bubble, and the next bubble will have had time to crash before the new regulation will enter in force. And I don't think actually that will be ever applied. The Dodd-Frank Act is very cosmetic. It didn't fundamentally change anything. Anything you cannot do in Wall Street, you can do in London at the moment, like proprietary trading. But I don't want to get too technical here now. Yes? That's a question everyone is trying to answer. And when the subprime crisis happened, no one knew that it had reached this amount. But I think the bond market is extremely overvalued because of this zero rate policy. Real estate as well. We don't think to what extent derivatives are used to leverage investments, because the leverage is a very big factor in crashes and bubble crashes, stock market crashes. So, yeah, bonds, real estate. Yes?
But it's not only like a United States problem, it's also Europe. You can take France,
yes.
for The France has a lot of debts since years, since they realized in 2006, 2008 that they have to face the debt problem because the money they were earning from the revenues were not paying the interest. So if now the interests are much lower, then they have more money in order to invest in the future of France. So if it's not only an economical advantage for private people, for investment companies, so it's also an advantage for governments in Europe. So what happens if we raise one more time those interests? What will happen for France in general?
If we raise interest in Europe,
Government debts.
if we raise interest on government debts in Europe, many sovereign debts like Greece, Italy, Portugal, Spain, Ireland are going to be in difficulty clearly. I mean, they are going to not be able to pay their financial charges on their treasury bonds. You know that you pay interest, if you're a government, you pay interest on your bonds, the bonds that you're borrowing, and if this goes up, well, that can mean financial strangulation for many of those governments, and we could be back to the euro crisis of 2010. So they are very dependent on the fact that the rates on their bonds remain very, very low, but they cannot control those rates. The long-term rates on the treasuries, this is a bit technical, sorry, but if you are a government and you have bonds, you're on the capital markets, your debt is on the capital markets. If the rates, the 10-year, the 50-year rates on those bonds are high, you as a government have enormous charges more to pay on your debt. So your GDP shrinks because you have more financial charges, interest charges. So this is a difficulty also for Europe. Europe is very dependent on having very low rates. Everyone now is very dependent on low rates because of this huge debt, government debt, corporate debt, household debt that is big and depends on 0 or 1% rates. So we were very dependent on, we're very vulnerable, the system is very vulnerable. And also, the last point before we now find the solution to revolutionize all this is that we are rewarding failure. I've spoken about that in previous conferences, that the system now rewards failure of the actors of the financial sector, and also, like Rafael said, the governments. We are rewarded for being too much indebted, for taking too much financial risk, for speculating too much. So we are being rewarded by the system for financial irresponsibility. This is the major problem today that we have in Europe and in the US. Same problem in Japan as well, by the way. So we need to make changes there. We need to make changes there because the central banks are really losing credibility. What changes can we make? What would you suggest in order to get rid of this situation where we have central banks, helping with zero rates, with buying of toxic assets, helping make those bubbles, and we have one bubble after another. We never stop having bubbles, yes? Bitcoin. How many are fans of Bitcoin in this room, please? Not more. Wow. You're not very trendy, all of you, the others. I mean, it's blockchain. Wow, no, 0.01%, 0.01% of people on this planet know what is blockchain, and I am even exaggerating. So, blockchain is something. It's a system, supporting the Bitcoin system, but actually, we have a few fans of Bitcoin who are believers in Bitcoin, right? You think it's the solution. You think it's the solution. Because
the solution, it's a tool.
It's a tool. For what?
Payments at zero cost, money transfers at zero cost, transactions, signing documents at very low cost. Very low cost.
Yes. Yes?
I think it's a bit early. I think for the first time we have a means of payment that comes from the world of internet, from digitalization, from its core principles. And for once we're not spending a lot of money trying to conform internet to old legacy systems. Yeah. So it might grow out to something.
It is growing very quickly, yeah?
From the inside.
Yes. Now, yes. I'll take all your remarks before, yeah.
I feel that Bitcoin, when the next couple
Yes.
where the price of Bitcoin went up as high as 1,600 times per Bitcoin.
Yes, of course. Like gold.
That's a bubble.
It was following gold.
But it went from like $4 a Bitcoin,
Yeah.
and now it's at $200 a Bitcoin.
250.
Extremely volatile, yeah. We can.
But it's safe.
It's extremely volatile. Yes. Yes.
Is that you mentioned blockchain? It's a very interesting technology, and we still haven't seen any real companies or any real applications of this technology. Maybe we'll see something with Ethereum. Maybe we'll see something with other such things.
That's that.
I saw two startups actually at Wall Street try to do blockchain.
They are building a trading.
UBS in London is developing blockchain.
They control the blockchain. Like they control all the nodes of it.
Yeah.
So if something goes wrong, they can fix it in the back. And if somebody has the power to do that, it just won't.
Yes.
What's interesting, yeah, it's an interesting alternative, certainly, but it doesn't solve the problem of regulating the banking system.
Right.
And I think this is, I mean, it's a plaster. It's
Right.
an alternative way. The regulation of the banks and the financial
Still a problem we haven't solved. We're going to solve it now. We have 5 minutes. It's going to happen now. Yeah. Yes. Yes, Leno?
I think actually the problem is that the government has too much power on the money, and they can print money ad infinitum. The moment you stop this being allowed to happen, you stop all of the inflation and the bubbles that come after.
Which brings us to the
You can't
solution.
solve that problem because there is a limit to the amount of Bitcoin that you can create, unlike real money, right?
Right.
Because the problem is government creates money, and that's almost a tax on everyone. Because
Tax on everyone because it devalues the currency.
so
That's right.
the minute we stop regulating the market and we let people make decisions and people decide what they want to buy and take the risk that they want to take, and when they take too much risk, they fail and they break,
Right.
then the market.
I think we found a way to regulate markets. You have to be able to fail. If when you invest $1, you can earn 50% on it or lose 50% on it. If you have the two possibilities, you are in a liberal market that can reward you and sanction you. So you are in a market that will self-regulate you because you don't want to lose money. If we cannot have this liberal free market, it's not going to work. It's all going to explode soon. So we have a very good solution here. I would say about suppressing, eliminating government regulation. Yes?
What you explained about subprimes, I mean, it sounds like we have two kinds of people in this world. We have the serious ones who create enterprises, who invest in the real economy, and then we have the gamers who prefer to play with money and financial stock markets and capital markets, etc. So what if we created two different systems? One where would be a sandbox where the gamers would play and then they would fail, and then the Fed would be the mama, like, okay, it's okay, sweetie, don't mind, it's okay, I'm gonna solve the problem, and then we
very
keep,
creative.
and then we keep a clean one, we keep a clean system for those who get up early in the morning to create change, to do something real. I mean, what if we did that?
Okay, we're going to sum all this up because all the solutions are there now. Yes.
Yeah, I was listening to what he said about deregulating the market.
Yes.
And that's been tried and tested in the US. And sometimes it works, sometimes it doesn't. But all this conversation seems to forget everyone who does not invest just follows the words of people who do.
Yes.
And so the basic everyman who has no idea, and if someone tells him we can either make or lose 50% and he invests his money and they lose it, the small, the individual. So the deregulation is good, but only if we're taking out the human factor of it. Because until it actually manages to regulate itself, everyone else is going to suffer from that.
Everyone is suffering from that. You have now 45 million people on food stamps in the US after the last crisis. Yes, another remark, and then we can sum it all up because all the solutions for revolutionizing the system are on the table. Yes.
My simple question is, isn't it a little bit easy to have a moral view on this? Like, regulation bad, no regulation good.
Is that moral? Do you think we are in a moral speech
I
here?
think there's many things we can say. I mean, the interest rates also we could talk about inflation. I mean, there's many ways to the equation. Speculation has a role to play. It's useful in some cases.
Yeah.
So
speculation will still exist, by the way.
So I'm just saying, let's keep solution. Because,
Yeah.
for example, in the tech markets, it's
Yeah.
different, the solution you have to buy, than the general market or the stock markets. And you don't necessarily have to one solution for the whole thing.
No. I mean, the market has valued the tech market very high, and some people think it is justified. Like, WhatsApp was worth $25 billion after 4 years of existence. Who has an example of any company in history being valued at 25 billion after 4 years? I mean, if you look at General Motors, how many years did it take to be valued at 25 billion? Do you know? How many years? General Motors, the first 50? More than that.
100 and something?
Not 85 years. And WhatsApp was 4 years because before it went at 25.
The world is going exponentially fast. It took
That's right.
100 years to adopt telephone. It took 5 years to adopt
Exactly.
smartphone.
So when you have a breakthrough, a technological breakthrough, it can change the paradigm. I'm totally.
It's actually a good example of what you were saying. I mean, in 2001, a lot of people lost money.
Yeah.
They learned the lesson. They invested different time next time.
Right.
And now the bubble is starting now again.
Yeah.
For 15 years, we had a really good run, right?
We had a good run.
Being built, a lot of money created.
Now, what happens? Can I
Can
just saying something here? The bubble from 2009 up to now, which is 250% upside on the Standard & Poor's index, has profited only to those who invest. That means that you are creating huge inequalities in the society. And I'm not a leftist to say that. Even the billionaires in the US now say it very openly. If you are in the investing community, you can get rich in amounts that no one in the real economy can. So it's just creating an enormous gap. So, and this is due to the Fed's role. Let us now go to the real solutions. You all mentioned them. If we eliminate the Fed, let us imagine that there is no central bank anymore. What happens? Short-term interest rates, the one that the Fed is hiking and moving all the time, those rates that has been on zero, would be market rates. It's the offer and supply, the supply and demand on the market that would determine where should be the short-term interest rate, exactly like the exchange rates on the forex markets or any rate. So you would be able to take credit or to give credit on the basis of what the market demands. So it would be a demand-supply system. It would be very much closer to the reality, and if suddenly you need to get a lot of credit and a lot of demand, the interest rates would go up, which would regulate the bubble of credit. See? Without a central bank, the market would regulate itself in terms of the amount of credits that are in the economy at a certain point. Second thing, there wouldn't be an institution that could print money on the printing photocopy machine and go buy a whole rotten market that has just collapsed. So the players, the market players that have speculated too much would be sanctioned. So it would prevent the creation of another bubble, because if you are sanctioned, you are forced to be more responsible because of your own financial interests. So you wouldn't have those incentives to speculate. Now, coming back to your idea to create a clean system and the casino system, we already have that. If you want to make casino, you go to Las Vegas, you can go to the casino, so we can make video games. So actually, the pure gambling and speculative world already exists. It's just that you have to remove the Fed from the whole system because they are adding moral hazard and speculative incentives to this. If you let the market regulate itself and the players be able to be rewarded and sanctioned on the basis of their ideas, you would still have some speculation, you would still have the inflation rate moving, interest rates moving, from only on the basis of demand and supply. So that would be, I think, the revolution we need. We don't need a central bank to administer the system. It is rigging the system, it is meddling in financial affairs, and it should not be doing that. Yes?
Just a question, are you talking about the Fed as the Fed or any central bank?
Actually, any central bank, because the European Central Bank is now engaged in exactly the same things. The Bank of Japan is also into the same thing, and it's failing even more than the US Central Bank.
So redefining the role, actually, not just getting rid of them.
Central banks should disappear. We don't need them. They're just creating additional money and devaluing the currencies and administering interest rates that should be market rates, market-driven.
So you're
Yes.
saying central banks are there to protect the crooks from failure?
Yes. Central banks are there to print artificial paper for crooks, yes. So, yes.
The thing is that central banks are part of the political system. They're useful tools.
Yeah.
If you remove the central bank, for example, who's going to lend to California? No one. I may lend to
Private commercial banks. Commercial banks can do loans to US states without any problem.
Politicians, the people we elect that
Yes.
we need
Yeah.
to run our lives, for now,
Yeah.
they will have less means of acting on our immediate environment. So I'm saying maybe it's good, maybe it's not.
But their action has put corruption in the system. Intervention, it has just corrupted the system.
Bitcoin was basically invented and pushed at first
That's
by
right. Bitcoin is a tool
which is interesting,
that we need. Cryptocurrencies
but
in
not
general.
sufficient.
Not sufficient. Not sufficient. But it's a very good system because it's far from any state-driven corruption or intervention, I would say, not corruption, into the system.
Who's going to intervene? And you don't know that.
On the
Someone is going to.
So far, the Bitcoin has proven that it's quite decentralized. Yes.
But your system, yes, it takes away the political interference, but
Yeah.
it hands over all the power for monetary creation to the banks themselves.
To the banks themselves,
So currently they can create any amount of money they like through debt.
which is already the case.
You've taken away the regulation, which means you've handed over the entire decision-making process for investing in any country or in all the countries in the world to a bunch of financial banksters in this case.
You're right.
That
You're right.
then have the power to decide which direction the investment decisions for the world as a whole will then be taken.
Exactly. But what has the central bank done besides bailing them out? Nothing.
I don't agree that the central bank hasn't done, but these were the guys that needed bailing out. So your proposal is we give them the power to run the world.
Give them give the credit and regulate the market, but they have to be supervised. And this is where the government enters into the game. That it has to actually supervise them, which it's not doing at the moment because it's not adequately supervising them at all.
I would say that we're going much further than this. Why on earth do we continue to give a bunch of private companies the right to create the monetary system?
All right. Who should have it now? Who should have the right to create the monetary system?
Well, clearly not these guys because they've completely fucked up the entire world.
If it's not the central bank and the commercial banks, who will it be?
Why not make it a democratic system? Why not
Right.
make everybody capable of creating their own currency?
Okay.
So create a system that decentralizes the power.
That's a very good
Then
point.
en masse,
I think.
you will make less of a screw up than we have with.
I think this is an excellent point.
Give the money directly to people. You attribute a nominal amount, and maybe as a universal revenue to people directly, and then let them decide with that amount of money
How they are going to allocate it. So they can start a company, and at least you're sure it's in the real economy. I think that the idea of a universal revenue is very much. Yeah, I think this is very, very relevant. Absolutely.
So
You remove it from
giving it to the central bank. So you shouldn't give it to anybody.
not to commercial bank at the yes.
I'm just it's in the same line as Maurice. My idea is to mix the Bitcoin concept with the basic income concept and the Federal Reserve of printing money. So you do
Would the Federal Reserve would keep on printing money? No, this is out.
That's a monopoly.
Okay.
So
it's a monopoly.
yeah. So you would any good IT guy can just start his own bank, and when I open an account with UBS, how much money do I get credited on my account? Zero. Okay. Why don't we just put 1 million in there? Or at least 2,000 a month, like the basic income one.
Now.
Okay, some guys will be upset, I know.
Yeah. I feel like, yes.
Are you giving to the people if you can give them free money? You talk about the incentive you give to speculators, right? Yeah. No failure. What is the incentive you give to people if I give you free 2,000 every month?
That's my reservation about the universal revenue as well, I must admit.
Because then you are spreading that thing that only a few actors have to pay to everyone.
If you go back even to prehistory, never any human being had access to free resources without bringing work in exchange. So this is my reservation about the idea of a basic income revenue. University. Yes.
System. Sorry.
Okay. Yes. Yes.
Do we know to whom belongs the credit?
Yeah, to the private banks. I think a bunch of private banks, including the biggest institutions of America. It must include the Bank of America, JP Morgan. I don't know if the Rothschilds as well are into the consortium. It's a consortium of banks, which is also the case about the Swiss National Bank, by the way. They're also shareholders. The big banks are shareholders of the Swiss National Bank as well.
There's a vicious circle between all these banks and the Federal Reserve. So
Yeah.
maybe
It's a conflict of interest, clearly.
in the future,
Clearly.
maybe we should think about to whom this system entirely belongs actually.
Absolutely, absolutely.
And what it's for. Can I just
Yes.
say people are not being given something for nothing? The WhatsApp valuation is a something for nothing.
Yeah, the WhatsApp valuation is certainly a lot of money. Because of the innovation premium, clearly. Yes.
Despite the fact that I didn't agree with many of the assumptions where we were trying to get to the final point, I just think that your idea of removing the central banks from the system is not such a huge difference to the entire system, because not much is going to change. I would like to ask you a question as well. What do you think is a purpose of the central banks? Like, what is their mission? What they have in their books written as a prime mission?
The stability of prices, that means they are here to regulate inflation. But the Fed also added that its mission is to stimulate growth in the US economy. They added that.
In most of the central banks around the world, the prime target is to regulate inflation, right? So what they are trying to do is they are trying to keep our prices stable. Meaning, if I have 100 francs today, in 10 years, I know it's going to be also 100 francs and I can buy the same products.
They totally failed in that. Totally and absolutely failed in that. Okay. Because you don't look at what they are actually doing. They're intervening on forex markets. They're buying assets they shouldn't be buying. They are modifying the whole rate environment. They are rigging rates. They are.
I don't think that the 0% rate is incorrect. At the current system, maybe you have a different opinion about where we are in the market cycle. I do think that we are still very unleveraged, and you can see it based on the information. So I do think that the zero interest rate is actually correct at this kind of stage. Once we are very leveraged, once people, as you said, are going to borrow a lot of money, of course, then.
Have you checked the fact that at least 65% of what is invested right now on the S&P 500 is leveraged because it's borrowed money?
Yeah, I did.
This is an enormous risk on the system.
Yeah, sorry, yeah, we're going to start this discussion.
Well,
sure. Yeah, go to back.
We're being kicked out or what? Are we being kicked out?
Obama is calling me. He's a bit upset.
Well, I am not surprised that Obama is trying to stop us from continuing. We were about to revolutionize the system, but we were stopped short of it. That's too bad, huh? Yeah, okay. Thank you. Yes. Yes.
Can you tell us how is it going to help if we remove the central banks from the system? Like, what is the benefit of it? If we say we remove the institution, which is here, primarily to try to keep the prices stable. So
but they didn't respect this mandate. We were not going to have a central bank buying the market when it fails anymore. That means if we have the next stock market crash, nobody's going to make the market go up when it should go down. That means if the economy has to lose 5 trillion, yes, we will have 10 years. Yeah, but we wanted to avoid 10 years of recession, so what we did is we rigged the whole system to avoid 10 years of recession. But recessions are a good thing. If the system abuses, it has to be deleveraged, repaired, and...
If you're going from the current system to the new one that you propose, we need in the middle 10 years of recessions.
Yes. Yeah.
And there will be the number of jobless people will be multiplied by 3, 4, or 5 for 10 years.
That's right. Let us be very honest. Yeah, but if we don't do that, there is going to be the next market crash. And how is the next market crash going to happen? Is that the long-term rates are going to go up because China and Russia and those countries are going to sell the treasuries. Actually, we cannot control this next crash, and if it happens, no amount of central bank intervention can prevent it. We have just to be aware of that.
But we have free markets, and we should let the market collapse once and for good.
Has to
20 years of recession
purge.
And start
Yes.
with something new after.
Quite
We
true.
don't have this recession.
We don't want to.
We cannot switch to a new system while it's impossible.
Politicians don't want austerity, and they're avoiding that. They are buying out of austerity with printing money. Sorry. We just so passionate. Sorry, I think it's absolutely central, those questions.
I feel super bad to intervene and stop this conversation because I'm not stopping it, in fact. I'm inviting you. Are you staying with us for another like 15, 20 minutes? So please, just move your conversations and questions. Myret is going to be with us for another minute. Thank you.